Hi guys, welcome back and thanks for watching another recap of the last 24 hours and the outlook for the next 24. Coming into the trading session today, the market was bearish, sold off initially, then recovered as we approached major higher time frame support, pretty much the 3,000 level. Eventually we sold off through that level. We're down right now a little more than 13% off all-time highs, at least in the futures. The drivers for sentiment today, there's really three primary drivers that we had. So the first one is the first case of unknown origin in the US, meaning that the individual had no known contact with someone who was infected with the virus. Second driver, the impact on global supply chains is still unknown. Goldman Sachs suggests that it's possible that we see no earnings growth in the US this year if the virus becomes widespread. Number three, the Fed says it's still too early to provide guidance without more data, which was something that would really comfort the market. So those were the primary fundamental drivers of sentiment today. So let's jump in and take a look at the price action. So looking at the daily, when we have a fundamental driver this strong, the technicals don't necessarily go out the window, but any levels are going to be just destroyed, aside from those that are major and acting as area for a retest. So let's review. We broke a major trend line today. Put that back in here. So that broke along with the 200 and this major zone. So we've got these highs here, and we've also got this 3,000 level. So that 3,000 level is extremely significant. It ended up being much more important than this level here. The market tested it, traded through it, and came back a couple times. We'll take a closer look at that in a moment, but this 3,000 level ended up being a lot more important. So any of these levels could be used as resistance. In order for us to have any technical confirmation of the resumption of any uptrend, these levels are going to have to get cleared. It's going to most likely act as a ceiling for now. These lows potentially could act as support, but honestly, the fundamentals, the headlines coming out regarding the coronavirus are going to be absolutely dominating anything technical. So let's take a look at the hourly chart. Here's the hourly chart. There's a lot to clean up here. So I'm going to go ahead and get started on that. This was today, and you can see we just absolutely crushed through this level. That blue box is highlighting the 3,000 level, and you can see we bounced from it pretty nicely. But looking from the hard right to the left, I'm going to start just deleting levels that weren't respected, which is most of these in here. Some of them could come back into play, but for now, just to keep this clean, I'm going to get rid of all the ones that aren't major. We have these below us. Who knows? Sentiment's going to drive that. I will put in a major level here, right there for the 3,000. And the reason I'm doing that is the last time we were there, it was still clear, and it was the level to break. And once we broke it very cleanly. I would anticipate a retest of that level. So yeah, that's pretty much it for the technicals. I mean, right now, when we're in this kind of volatile environment, any kind of support and resistance is most likely just going to get demolished. One thing that will hold up better in these times are going to be your round numbers. So you've got the 3,100 level, 3,000 level, 2,900 levels down here. So that's going to be, these are probably going to be the most major levels. I mean, we do have these support levels below, but like I said, when headlines this strong are dominating the market, there's not going to be a whole lot that that support and resistance is going to be able to do for you. So that's the hourly. Let's take a look at the 5-minute recap of the intraday session. All right, so this is today's price action on a smaller time frame chart, and let's get the drawing tool here. So actually, let's show the open. So the open was right here, this candle here. We initially traded up. Let me get that back here. All right, so we initially traded up, head faked, traded down, kind of sloppy, and we charged right for this level. This is the 3,000 level. This is the line in the sand. Now that level of support and resistance that was on the daily chart from a while ago was right about here. It wasn't really respected. We traded down towards it, and then when we broke it, we approached the 3,000 level, but buyers stepped back in, sellers were exhausted, and that made for a bit of a rally. This is most likely a result of a combination of things. You've got your dip buyers stepping in to buy the dip. You've got short covering from the shorts that got overwhelmed by that, and you can see the buyers stepping in with this engulfing pattern. You can see these moves up were very, very strong. Any short-term traders that were in here looking to get long probably bailed right around here, probably got stopped out, which accelerated this move to the downside. So realistically, the things that I was watching today was this up move was in the context of a long-term bear move, and it was pretty classic reversal. We had a 1-2-3 pattern, and a 1-2-3 pattern is where you have a rally. It has to take place in a rally. 1-2-3s don't exist in sideways markets, so it has to be a rally or a sell-off because it reverses a move that's been occurring. So in this case, we have an up move where we're making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and then we failed to put in a higher high. So we actually put in a lower high right there, broke that low, used it for resistance once it was broken, and then we continued to sell off all the way back down to this 3,000 level. And when we broke it, we broke it. So that's a recap of the price action for today. We've already looked at the calendar. There's really not a lot. PCE's coming out, but that really doesn't mean anything. There's really no point in paying a lot of attention to data coming out, because when the Fed is coming out and saying, hey, it's too early for us to provide guidance without any more data, and you've just got this wild fear in the market, it's pretty much going to be one of those markets where the paradigm is risk on, risk off. Risk assets are going to get hit. Safe havens like gold, maybe not the yen this time, but pretty much gold and treasuries are going to be benefiting from this. So not trading advice, that's just the way that this type of paradigm of risk on, risk off works. So looking at moving forward, looking at the levels of support and resistance, I would keep an eye on the round numbers that we covered. Let's look back at the hourly to do that. So these highlighted round numbers are going to be relevant. These levels of support and resistance are going to be much less so. Daily levels are going to be favored. So these, I mean, I'll draw it in there. This level down here. Let's see what we got in there. So it's just shy of the 2,900. Yeah, so yeah, that zone from 28.5 to 2,900 is stacked on these others. It's nothing like a very clear line in the sand. Honestly, the most clear lines in the sand are going to be above us. So the 200-day moving average, this broken trend line, this broken level, this level of 3,000. Those are all going to be the most critical levels ahead of us. These downside levels are not entirely relevant, not when the market is in a panic like it is now. So yeah, that's pretty much it. We'll check back in 24 hours and do another update.